Hi friends, I'm Chelsea Grayson coming to you once again from the Office of the CEO. This is my show where I can help you be more successful in your current career, and I can also help you successfully transition to a new career. So today is the final episode in my multi-part series of when you're transitioning to a new career and that new career is your own company, how do you draft the business plan? And today I wanted to go over what I consider to be one of the most significant parts of your business plan, even though ironically it's usually set forth in an appendix. And that is the set of financial statements that you're going to want to prepare and attach to the business plan. Now, best case scenario, you've been operating your business for a while, you've got 3 years of financial statements. Financial statements would include a cash flow statement, a P&L statement, a profit and loss statement, and a balance sheet. And if you want more details about what's comprised of all of those financial statements, please feel free just to DM me separately and we can have a conversation about that. So even if you've just been operating for a couple of months, you ought to have at least one, if not all of these financial statements put together for that stub period, just whatever period of time you've actually been operating. If you haven't been operating at all and you're really truly just a startup, then you at least want to include a budget. So you can talk about what things are going to cost moving forward, how much money you are going to need. Now, I also suggest, although you're probably not going to read this anywhere out there, but I would also strongly urge that in this section where you're attaching your financial statements, you also include what's called a cap table for shorthand, and longhand it's capitalization table. And I've got a different take on what a cap table ought to look like than most people will talk to you about on the internet. So a cap table traditionally should include the list of the various shareholders in the company, also known as the people who have invested money in the company, not on a loan basis, but they've actually invested money with the company. It should talk about what kind of security they've been given in exchange for their investment. So whether it's common stock, preferred stock, is it a warrant, is it an option? You want to describe what kind of equity each investor has, how much they put in, and what are the terms of that equity. Now, you might not have any shareholders. You might be the only shareholder at this point. You might be the only person who's actually put money into this company, but it's imperative for outside potential investors. It's imperative for potential high-level employees and lenders to the company to see who's put money in and what do they expect in return. Now, the thing that I'm going to advise you to put in this cap table that you won't hear from a lot of folks is you also want to describe what sorts of loans the company has taken out, even if it's a loan from a family member, right? But especially if it's a loan from an actual financial institution. So you want to put in how much was the loan? Is it a term loan? Is it a secured loan? Is it secured by all the assets of the company or just some of the assets? What are the various terms and provisions that are comprised of, that this loan is comprised of? And most importantly, of course, what are the due dates of the various payments? Can you prepay without getting a penalty? Those sorts of things. These are all just as important as the various financials, the various traditional financials that you're going to want to include in the sets of financials in your business plan. And investors are going to want to know this stuff. They're going to ask you for it anyways, so you may as well just include it right up front in the business plan. Now, going back to the traditional financials that you're going to be including in your business plan, aside from the things that are sort of traditionally put into a balance sheet, you know, what are the assets of the company, what are the liabilities, the profit and loss statement, and the cash flow. How much cash do you have? How long is that going to last you? When is new cash going to be coming in? You'll also want to talk about the cost of goods sold. This is otherwise known as COGS. You may or may not have heard that acronym. The cost of goods sold, in other words, what does it cost to make and sell the product? Or what does it cost to provide the service that your company provides? It'll include things like payroll. What does it cost to pay your manufacturer, the various factories that you're using? What does it cost to buy the raw materials, you know, if you have a product that your company is selling? What are the various kinds of insurance policies that your company carries Or what are the insurance policies that your company is going to have to carry in the future? So this can be, a general umbrella policy, products liability policy, directors and officers, otherwise called D&O, EPLI, which is employment practices liability policy. This covers things like if you get sued by an employee for a wrongful termination case, that's what EPLI will go to. There's cybersecurity insurance. There's all sorts of insurance that you're going to want to look into for your company. And insurance can be expensive. There's premiums, there's deductibles. When people file claims, there's often costs that you have to outlay first before you ever get paid back from the policy. And of course, when things happen with your company, just like with car insurance, the premiums and the deductibles can increase in an unfavorable way. So you want to be sure and describe all of the insurance that you have or intend to get, and what are the terms of that insurance, and what do you think is going to happen with that insurance moving forward. Also included in COGS, cost of goods sold, is what is a cost to warehouse? What is a cost to distribute? If it's services that you're providing, are there travel costs involved in sending, for example, your consultants out on the road to provide advisory services to your various customers? So you're going to want to think about all of that as you're then turning to, what am I charging my customer? Because you obviously want to charge your customer more for the product or service than what it costs to make or provide that product or service, right? So you want to think about really what are all the costs and what am I going to charge my downstream customer? And am I going to have different packages depending on who's the customer or what exactly am I providing to that person or entity? You want to then calculate what the margin is on that. What are you making each time you provide that service or that product? And the next thing you're going to want to think about in this section where you're talking about your financials are projections. I usually advise clients to project at least 3 years out, if not at least 1 year out. But 3 years out is typically what potential investors are going to want to see, and also potential high-level employees, just to understand the longevity and the future path of the company, right? You will base these projections. Projections are just a prediction of how you think the business is going to do over that period of time, call it 3 years. You'll base that on historical performance, of course, but not just historical performance, right? The company is hopefully not just going to continue to plod along in regular fashion like what it's been doing over the previous period, because, the company may not have been operating for that long, and so you're not factoring in all sorts of things. So you want to factor in all sorts of other sorts of factors, right, that help you predict how the company is going to go. What is the growth of need for your product or service going to look like over the relevant period? So what is the market going to look like? Is this a market that is going to exponentially increase because you're providing something that's going to meet future need? So when COVID hit, right, all of a sudden companies that may have been making masks at a small scale, like N95s, or even some companies were already making cloth masks for travel, well, they can't project over the next 3 years that their company is going to continue to do the same business that it did back in 2019, can they? They have explosive growth on the horizon. At least they're hoping they do. And we're going to be wearing masks for a while. So they're going to have to look at what is the growth of the market? What is the all of a sudden exponential growth of need, right? So they're going to want to take a look at that. You want to look at also growth of awareness. If your company just started, well, surely you'll be investing marketing costs, right? That's one of the things that goes into COGS, cost of goods sold. Well, those marketing investments are hopefully going to dividend out, and the company's, the market's awareness of the company and its product or services will grow. And you want to factor that in as a way of figuring out how to look at projections. You'll also want to look at what's the growth and capabilities of my company going to look at over the relevant period. Am I going to grow the staff? Am I going to get more experts on my staff? Am I going to have a bigger board that'll help me, get more customers? So you have more capabilities, more networking, more ways that you can grow the footprint of the company, and then necessarily revenues will grow. Now, it might also mean that your costs are going to grow because payroll and board fees and all of that, but certainly revenue will grow. So I think I'm going to end it there for this particular episode, but hopefully that gives you a sense of the sorts of documents, the sorts of numbers, the sorts of factors, and the sorts of projections that a potential investor or a potential high-level employee is going to want to understand from taking a look at your business plan. Like I say, a lot of this stuff will be in an appendix to the business plan because it's not necessarily put into paragraph form. These things are often attached as separate financial statements, but it's very important. It's usually one of the sections that I skip to first when I'm taking a look at a new business plan. So I hope you've enjoyed this episode. Please be sure and subscribe to my channel and turn on your notifications so you don't miss the next episode. And I can't wait to hit you with the next episode because we're on to a completely new topic. We've now closed out our business plan topic, and I have a lot of good stuff in store for you guys. So I will see you next time from the Office of the CEO.